Yeah, so is my audio video clear?
Yes.
Okay. So do you want to make it interactive to start with, or should I just start talking about markets and then we get into the small PPT which I have?
Sir, I think, sir, we would love that if you can lay the foundation of your mindset and then, sir, we can take it further.
Okay, fine. All right. So I assume that there are a lot of students who have joined in today. I think I have been a student of the markets for the last 21 years. I still count myself as a student because, this market has been trying to do new things almost on a daily basis. So I think one learning is you have never learned everything. And I think every day, every week, you are learning, you're trying to understand new things, new concepts, new theories. And I think, one bigger problem that I see a lot of students facing, because I gave the CMT designation. So people who are interested in technical analysis, there is a designation, there is a qualification called CMT. Just like there is a CFA, certified, financial analyst, which is a very popular certification. There is something called a CMT. So people who want to make a career in technical analysis and want to understand this concept well, I would recommend that you go for such a qualification. And I think one big problem with today's market is that a lot that you read in the textbooks, doesn't work as well in the practical side on the financial markets. There is a disconnect because please understand, many of the textbooks on technical analysis and stock markets were written in the 1970s and the 1980s and the 1990s. That market is very different to what is happening today. Do you all know that WhatsApp came in only in 2008? And can you imagine the communication we had before WhatsApp, right? So the communication at that point of time, the flow of information at that point of time was very different. And that's probably the reason it's very important to have a practical aspect to understanding today's stock markets. So don't go by page 66 में ये लिखा हुआ था तो ये होगा. I think gone are the days where something like that can happen. I mean, in other books, maybe in other professions, that might happen. If you are a CA or if you are a lawyer, you can refer to certain pages of the text to understand how you should deal with that situation. In today's world, the situation might be completely out of the box, and those things might not have been written on the textbooks. So my mindset over the last couple of decades is to understand markets and also look at it in a very holistic fashion. When I started off, I was just a technical analyst looking at charts, trying to understand markets. But today, I look at fundamentals, I look at what is happening, what is driving prices higher, what is driving trends, what is driving sectors. So we look at fundamentals, we look at charts, and we understand what smart money is trying to do. That's also very important. You need to be very well networked. You need to know who is doing what. I'm sure everybody has heard about the big cash position of Warren Buffett. So I'm sure students have heard about and learned about Mr. Warren Buffett. So now there has been a lot of talk in the last 1.5 months that this person is sitting in one of his largest cash positions ever. So the question is, why is Mr. Warren Buffett sitting on cash while stock markets are doing so well? Yesterday, the Fed cut interest rates by 50 basis points. US markets are at lifetime highs. Everybody is excited. And you have one of the richest person on the planet who has made all his wealth from the stock markets sitting on huge cash. Isn't that a disconnect? Right? So these are questions that you need to understand, and these are things which we try to understand at Goldilocks, where you need to look at things technically, fundamentally, and understand smart money action or what the big guys are doing, who is committing where. Everybody knows the late Rakesh Jhunjhunwala ji, who had a large position in Titan. He held that stock for about 15 years. He made serious wealth in that stock, right? And but not everybody on the street has the ability emotionally to hold on to a stock for 15, 17 years. We are all as students. I know everybody is excited. You must be doing some sort of trading. You must be buying something at 10 o'clock, trying to sell it at 1 o'clock, or buying something today and wanting to sell it after 3 days. It is a zero sum game. I interact with some of the best traders of the world. At the end of the day, it is discipline and risk management that will take you through. And NSE data tells you that 8 out of 10 people lose money at the markets. If you log on to any trading terminal, it's quite ironical. When you log on to any trading terminal, the first thing that comes on the screen is 8 out of 10 people lose in the market. This has happened. Are you sure you want to go ahead? And we click on yes and we go ahead. Right? I'm sure everybody goes through that drill. So it tells you that, if somebody is making money, somebody is actually losing money. Okay, so please keep that thought in mind. Don't have a very trading mentality. I mean, a lot of you students and whoever has joined today in this call and whoever might be listening to me later on the recording, trading is not as easy as it looks like, not as easy as the YouTube videos might suggest from a lot of channels and the Telegram channels and the YouTube videos, where you might feel that, Array, it is so easy to make money in the markets. It is not, because the market might reward you 7 times, but when it takes away everything and more, right? So it's important that you have a more structural mentality. I'll give you a great example. We all use the product of Zomato, right? Zomato became a listed stock. It was at a level of 50 rupees. Today it is close to a level of 300 rupees. So when I sit with my team, we discussed that, can an India survive without Zomato? We came to the conclusion कि आजकल के बच्चे को तो it's very easy, to just take an app, order something from Zomato and enjoy the food. You don't like food, what your mother is making, what your family is making, just order Zomato, be happy with it. So we realized, and Zomato charges about 5-6 rupees per order as a certain charge, which is all hidden, by the way. अगर वो 6 का 7 भी कर दे या 8 भी कर दे, I don't think you'll stop ordering. So this is not a recommendation. This is just an observation. So we realized that Zomato as a brand is something, as a concept, as a business, is something which is here to stay. Like Uber or a Zomato is here to stay. And that's how you can play the story. Now you had two options. For example, you as a student thought of Zomato as a great concept. You bought it at 50 rupees as a stock. It became 80 rupees in a matter of 3 months. Now is the real problem, whether you are going to sell that stock at 80 because it's quick money, it's large money in a short span of time, or you want to play it as a bigger story. And this is what some of the greatest investors in the world have done. They have played the entire cycle. A late Rakesh Jhunjhunwala could have easily sold Titan at 2x, but it became multiple X for him, right? So I think have that perspective of playing things more structurally, keep investment in your mind. Don't have a very trading mentality. And as students, that's the last thing that you can do. I believe me, it's a lot of excitement. I did that myself when I got into the industry. And it's a very interesting story. I actually opened my Demat account the day after September 11 happened in 2001. I remember walking into the office of one of the brokers in Chennai, it was, and it September 11 had happened, the Twin Tower, attacks, and nobody was interested in the stock markets. And I just passed out of college, and I was like, this is probably the best time you can open a Demat account and do something in the stock markets. So again, the key message is you have to think contrarian. You have to think contrarian. No average person in this world has done something special. Why is MS Dhoni what he is? Why is Mr. Sachin Tendulkar what he is? Why is Roger Federer what he is? Right? They all have something special and they have put in that hard work, that dedication. So stock markets is all about thinking out of the box, thinking long term, and having that risk management and discipline in play. And if you have that, I think then you'll go the long way. When I started off, Sensex was at 3,000. I remember my first job. I can't even put the figure because it was so bad when I got my first job. 2003, and I get into the industry. The Sensex was at 3,000. Today, the Sensex is above 80,000 and getting closer and closer to 1 lakh. So now many of you students who are getting into the markets, I'm sure the next 10, 20 years will be a great opportunity. But mind you, there is a lot of noise. When I started off, there was very little noise. I could read 5, 6 textbooks. There was no WhatsApp. There was no YouTube. There was nobody to disturb you. I just had one teacher and one book. Based on that, I did my entire research on stock markets. And that really helped me. Today, a friend is calling you. Have you checked on this hot stock, which everybody is talking about? and there are like 15 books, all kinds of books which you have an option. YouTube videos, वो तो लगता है कि एक library है. You can pick up anything and you feel that you'll become a master. And how do you sell YouTube videos? Do a session of 3 hours and become a master in the stock market. It never happens like that, friends. It never ever happens like that, right? So one great example which I give a lot of people is, there are hundreds of doctors in the city. There are hundreds of lawyers in the city. You go to that one doctor whom you trust, जहां से आपको वाइब अच्छी है, जिसका क्वालिफिकेशन अच्छा है, और जिसने पिछले 5-6 सालों में 10 सालों में कुछ काम किया, अच्छा काम किया आपके लिए. You trust that person. Similarly, when you go to a YouTube video or any content, see the credentials of a person. Has he only seen the last 3 years? If the person has not seen the last bear market, how can he just comment on today's bull market? Please see the credentials. I don't want you guys to just look at that hot title, the very flashy title which comes up on YouTube videos, because what they want is, they want your eyeballs, right? And with your eyeballs, they'll take everything that you have in your mind, and they'll corrupt your mind as well. This is very important, because when I discuss, I do this with a lot of people who are new into the industry. This will disrupt your thinking process. So read good papers, watch good YouTube videos, some important books on technicals, written by some. I'll give you some books later in this talk. You could use all of that, and that will be, I think, very very helpful for you. So the context is to be active, to be vigilant, keep discipline in mind, keep risk management in mind, follow the right people, and thinking long term is extremely critical. And be in your own huddle. I see a lot of people wanting to do things all together. No, be in your own huddle. Think about certain things. Think about certain stories, concepts. What is happening in the country? If the Fed has cut interest rates yesterday, how will it have an impact on various sectors of the market? This can be a case study for all of you. Which are the sectors? Which are the stocks that are going to be beneficial because of this development? Right? And you can even study some of the US stocks. What's happened to Apple. Very simple. The Apple new iPhone is being launched. I keep hearing that every day for the last few days that pre-sale is opening. Well, what do I say? I'm not a very big fan, because this has been happening for the last decade. But that's how the sales are, and that's how the company is where it is today. And we are talking about $1 trillion of market cap. Right? In India, we are far away from reaching those numbers. $1 trillion of market cap, some of the largest companies in the world. I remember when Amazon came into India, I was very bullish. I was like, this company will come and disrupt the industry. When I started using Apple, I think it was iPhone 7 or iPhone 8. I knew that this is something that we are getting hooked onto. It will disrupt the industry. So you pick from your life experience and played at the stock markets. Do you want to play Amazon as a story? Can we survive as at Amazon? I see a lot of family members of mine who are obsessive. If they have not placed an order in once in 2 days, something happens to them. Right? And this is the advantage with these guys take, and that's the kind of money that they have made over the last decade. So that's basically the backdrop as to how you should deal with markets and how you should prepare yourself. I think the key message once again is, please stay away from noise, because you come with a very fresh mind right now. Don't clutter it with what is happening on social media. आप social media से जितना दूर रहोगे ना, उतना अच्छा रहे. Get into concepts, meet the right people, read the right things, understand major developments that happen in the stock market and in the economy. And I think that's going to be very rewarding over the longer term. So I think this pretty much lays the foundation. And if you have any questions, I can do it right away, or we can do the quick presentation which I have.
Uh, Sir, based on few chats that I have received, if you allow me, can I, sir, ask some certain questions at this junction?
Yeah, sure.
Uh, Sir, first thing that you mentioned about, thinking contrarian. Sir, on this aspect, for example, the Zomato example that you gave, correct? Sir, I think at that point of time when IPO came of Zomato, almost the entire country was in sync, actually in the herd that Zomato will be a great story. So, what is your, sir, ideology? So you would have played Zomato at that point of time, or after IPO listing gains when the Zomato corrected, at that point of time you would have been interested in that particular story, even though you would have agreed since beginning that India cannot live without Zomato. So how do you place at that structure?
That's actually a great question. In fact, I did not look at it as a stock very seriously when it got listed. I think it was at
Okay,
levels of around 120, 130 when it
correct,
got listed. And it just kept falling for about 6 to 12 months. And there was an
correct.
absolute madness when Zomato got listed. And the
Yes, tomato
valuations
is
were,
equal to Zomato thing
yeah,
started
and
in
the
market.
valuations were extreme, if you remember.
Yes,
And the
correct,
earnings visibility were not there. It
correct,
was a company which was a loss-making company pretty much, which had come up. Yes,
correct.
everybody was using the product, but nobody had a visibility that earnings are going to come up over the next certain quarters.
Okay,
Then as the stock corrected, we just let it fall. As a technician, I don't fight the price action. The
correct,
price kept falling. We kept avoiding it. But when it
correct,
came down to a level of 50, 55 rupees, we realized that what is your margin of safety? How much lower can it go from here?
correct.
That's the time when we started looking at the charts. And from there, the gradual turn happened to about 65, 70 rupees. And it started making higher tops and higher bottoms. I'm
Okay,
bringing in the first fundamental concept of technical analysis. After listing, it made lower tops and lower bottoms. So it was in a downtrend. So we never made a commitment. But from levels of 50, the first time it started making higher tops and higher bottoms, and that changed the game.
okay,
Then we realized, and there was earnings visibility. The Blinkit happened. So there was this visibility, and the market is very forward looking. So
correct,
market got a sense that over the next 2, 3 quarters, EBITDA is coming.
okay,
Profits are coming. And
okay.
based on that, I think smart money action happened. We caught it on the charts, and the rest is history. And thereafter, the
Oh,
next 2, 3 quarters were amazing, as you all know. The
correct.
stock did exceedingly well because the results were very good.
Very good. So, sir, to summarize, basically, you combine your technical setups with the earning visibility triggers. That is how you try to play the thing. Am I right in summarizing, sir?
I think so, and I think this is the way everybody should do. Because when I got into the industry, I was told कि
Yeah.
आप क्या choose करेंगे, आप fundamentals choose करेंगे कि आप technicals choose करेंगे.
Correct,
We were not given an option of both. So I
correct,
choose the area of technical analysis, and then I worked for a broking company for about 15 years. I realized that they are not and or. They have to go together. So
correct.
when we started using fundamentals and technicals together, that's when magic happened.
Excellent, sir. Thank you so much for your insights. So next question actually that I had in mind is actually a very important one. Like you mentioned the importance of the riding the cycle because a lot of alpha is made in the early of the cycle and the end of the cycle. But sir, even if we see at the overall market level or at individual stock levels too, even if you pick the greatest bull run from 2003 to 2008, sir, you would already know the data. There were multiple 20, 30 corrections on the index level. We all have heard the stories like it's so easy to communicate that if you would have hold Amazon, but you could not have handled 80% drawdown in Amazon 2 times in a decade. So, sir, how do you, what data patterns, what ideology do you use actually that might help anyone to actually ride the cycle, or is it that mindset? At weaker level, you exit and then you re-enter. How do you actually manage the riding the cycle?
That's a very good question. And I think 2003, 2007 was very difficult because you had multiple large corrections. As you rightly mentioned, the Nifty itself witnessed so many 15, 20% corrections. Within the bull market, there were two lower circuits. So you can imagine the
Yes.
mindset of people, right? So 2004 happened and 2006. In fact, 2007 October was a lower circuit as well. So we actually had three lower circuits within the 5-year bull market. Can you imagine that? But please understand that bull market was driven by foreign liquidity. So when foreigners came, they pumped it into the Indian markets. Indian markets did well. They left for different other avenues. Indian markets corrected. So So that way it was very difficult because you cannot, as an investor, uh, take a drawdown of 50, 40, 80%. Some of the greatest investors in the world have done that. But for an average person, it's very, very difficult. But in today's market, the scenario is different because today's bull run is led by domestic liquidity. And because of domestic liquidity, there is no volatility. So what you're seeing is actually 5, 10, 15% corrections from time to time. So it has been very easy to ride on to stocks. I'll give you a great example, Indian hotels. I've been a big fan of the Taj brand. I've spoken about it multiple times on TV as well. The stock did nothing for about 15 years. Then COVID happened. People started realizing, "Arey, zindagi bhi jeena hai, rupiya spend karo, go for holidays, travel, make the most of your life." And that's when I remember Indian hotels was at 200 rupees. Today it is at 700 rupees. And this is just in 3 years. And what are we talking? The Taj brand. I'm sure every student of yours here has visited one Taj property in their life. And the experience is great. I remember, when I did something good in life, my father used to tell me, ki, chalo, let's go to Taj for dinner today. Or let's go for a staycation today. Right? And it's a Tata brand after all. So 200 to 700 has been a wonderful journey wherein you did not see many dips. Now, which is a tool you might ask, which will help you understand and ride these cycles without problems. And that tool in technical analysis is moving averages. So if you use a weekly chart or a monthly chart, you plot a 50 period moving average on that chart. And as you ride the cycle, till the moving average does not break, you simply stay in the game. I can give you great examples, Indian hotels being one, Trent being one, uh, Supreme Industries, many of these chemical stocks, which have all done so well, and Titan, for example. If you, this is a case study which I do with a lot of my team members. If you plot the weekly chart and the monthly chart of Titan, not once in the last many, many years did the moving averages broke. So it kept you in the game. And please understand, the market is the best judge. It is the best judge to tell you if there is something wrong, or the trend is reversing or not. So the technical answer to that is moving average. The fundamental answer is right now the liquidity angle is so strong that markets are seeing very shallow corrections. But this will not always be the case. So one has to be very vigilant at all times.
Thank you for an extraordinary answer, sir. Just one counter question. So by 50 day moving average, sir, you use exponential EMA level, sir?
Yeah, so I like to use only exponential moving averages. And just to
Okay.
add on, I like to use Fibonacci numbers. So numbers
Fibonacci.
like 13, 34, 55, 89. I like to use these numbers because these are not popularly used by the average person on the street.
Sir,
He would
sorry to
use,
just interrupt. Sir, I think it would be great for students to learn something about Fibonacci levels. They aren't aware of the same. If you can, sir, throw some highlight on that.
well, it's a mathematical concept. I think this might not be the right forum for me to explain it in detail. I think they
Yeah.
can research it and it's very simple. But basically, these numbers, which are basically 5, 8, 13, like 5 plus 8 is 13, 13 plus 8, that takes you
21.
21 to 34 to 55. So this is a mathematical concept. Now, a lot of people debate this concept, but I have realized that over the last many decades, as a number, this has worked very well because few people use it. So instead of using a 20 period or a 50 period, why not use a 55 period or a 34 period? I think it will work much better for you.
Uh, Thank you so much, Gautam, sir. I think those were the questions till now. So, rest, sir, you can go ahead with the presentation, sir, if you are comfortable.
Yeah, I have a small one. So can I share it? One second. Let me see how do
Yes,
I
sir.
do it.
Sir, I have allowed multiple participation. You can share the screen now.
One second. So is my screen visible?
Yes, sir.
My screen is visible, right?
Yes, sir.
Okay. So I just have few pointers. I think in my initial talk, I've already covered a lot. But I think if I have to just cover a few other pointers, which I keep saying at various forums, and I think this might be very important for students as well. I think the world and financial markets in general have changed since the pandemic. I see a lot of people thinking and studying about what happened in the last 20 years. But I personally feel that what has happened after 2020 has changed the game completely. Financial markets have evolved. People have started deploying serious amount of capital. Every single Indian is now trying to make the most of the Indian stock market, which is great. Because our parents, our fathers have always taught us कि अरे FD में पैसा डालो, stay safe, uh, save for the rainy day and things like that. And stock markets is a dirty place. It's not a good place to be in because it always ends badly. We've all been engraved with all of that. But I think after 2020, the game has changed completely because of the domestic liquidity. And I think I just want to highlight a few points here. Technical analysis is gaining a lot of prominence and respect because demand and supply has taken over. You must be hearing this word liquidity. Everybody is talking liquidity. And please understand what is liquidity. Liquidity is a fight between demand and supply, right? There was a time 15, 17 years back wherein we as a community of technical analysts were never given so much respect and importance. We were always given a very inferior, approach to things. But now things are changing. I think the best people in the business are now wanting to understand technical analysis, wanting to understand from us as to what we feel about the markets. And I think liquidity can best be understood using the concept of technical analysis. Many of these points have already gone through social media, artificial intelligence, information overflow. I think they have just evolved markets. And I think the most important line in this entire slide, which I keep saying all the time, is the skill of riding a trend is more important than identifying a trend. Because 20 years back, we used to be very happy if we just found a trend, if we found a breakout. But today, because of AI, because of certain softwares that we use, understanding of finding a breakout is not difficult anymore, right? It's about how you ride that trend, how you ride that breakout. The example of Zomato, example of Titan, and many such stocks, Indian hotels. How do you ride that trend over a period of time that can make serious wealth for you? So this is a skill which I think students need to learn, and not just about I caught the next 10%. That's not important. You need to understand how can I catch the next 100%. You don't need to be fixated in your mind, but that should be your perspective. I'll go through some charts, which I think are lovely examples, and I think your students might, uh, find it very useful. So there are certain tools that we use in the field of technical analysis, and one such tool are the pattern studies. What is a pattern? A pattern is basically a battle between the bulls and the bears. These patterns come up on the charts at all points of time, and based on the pattern, we make a commitment whether the stock will go up or go down. This is a
Correct.
stock called REC. I'm sure everybody is aware of this stock, which was in the news for the last 2 years. But this is a
Correct.
chart for people who have never seen a chart. This is how a chart looks like. So as you can see, there are blue bars and there are red bars. Blue bars meaning that the stock is going up, red bars meaning that the stock is going down. As simple as that. So this happens on a daily basis. This is a daily chart. So there is one bar for one day, open, high, low, close. In the year 2017 to 2023, early 23, this is a pattern which was being made. Can you see this line which I have drawn? And then there was a
Yes.
breakout at this level of about 86, 87. And post that breakout, the stock has obviously gone up from a level of 84 to a level of 640 rupees. Now, if you study any textbook of technical analysis, this is actually what we call an ascending triangle pattern. Some
Yes.
people even call it a cup and handle because this is basically what you call a cup pattern and this is what you call a handle. For people who have never heard technical analysis, all of this might sound Greek, but then when you read a couple of books, I think it will make it very easy for you. And all you need to do is find such patterns on the charts from time to time, and you'll keep finding these patterns on the charts. So at
Correct.
84, this breakout happened. I simply drew a line on the upside. As you can see, the market kept resisting at this line, but here the breakout happened, and thereafter there was no looking back. Another very important point is that it kept making higher tops and higher bottoms. Can you see this? higher top, bottom, higher top, bottom, and this just continued for the last 2 years. So this is something that you need to note. And these are patterns that will keep showing up on the charts. And if you can simply identify these patterns, it will go a long way for you in understanding the trends at the marketplace. So REC is a great example because here I'm not giving you an idea to capture the next 5% or the 10%. We are talking of a mega trend here. And this has been a mega trend because a 84 rupee stock has become a 600 rupee stock, right? That's a multi-bagger return in a matter of 2 years. We are talking about 6, 7 times your money in a matter of 2 years. What does the FD give you? An FD gives you a 7% annualized return. I'm just trying to compare the two. Obviously, the risks are much higher in the stock markets. But if your analysis and if your reading is correct, there is very serious money to be made with discipline. So this is one example. I'll go to the next example, a company called Cyient. So this happened in 2022. It was in a sort of a range. Can you see this channel? Basically, it was a battle between the bulls and the bears. The battle ended at this point. This was, I think, January, February 23. It saw a breakout at 775. And thereafter, look at it. No looking back, serious, making higher tops and higher bottoms. And it moved to a level of 2,400 rupees. So such patterns keep appearing. I have another chart, escorts. This is what we call a channel pattern. I'm not going into the details because it might not be right for this audience right now. You need to do a little bit of research, need to do your own studies, but I'm just giving you a perspective as to how we do technical analysis. And this is a stock escorts. Look at what happened for about 10 months. It was in this channel quite beautifully. Look at this line on the upside and look at the line on the downside. It just stayed in this channel. Thereafter, a breakout happened at about 2,700 levels, and 2,700 became 4,200 in a matter of 6 months. So you will study all these patterns in the textbooks, whether it's a head and shoulder, a cup and handle, ascending triangle, rounding patterns, channels, flags, pennants. These are all patterns in the field of technical analysis. And there is always one such pattern on any chart. So whenever you open any chart, try and figure out which is a pattern which is currently in formation, and that will help you to take a trade. So I've showcased 3 charts here, and this pattern also is as good as it can get. Look at the breakout and look at the move thereafter. You might say, is it as easy as it looks like? No, it is not. It can get very complex, but you have to keep preparing and training your eye to understand and study these patterns. So this is one segment. The other segment, a lot of people ask me is, how do you write trends? The answer is moving averages. I think earlier in the presentation, we spoke about moving averages. I'm giving you a stock here, which has been a big mover in the last 2 years, and that is Glenmark Pharma. As you can see, this is the price chart of Glenmark Pharma for the last 10 months. And this red line that you can see is a Fibonacci moving average. Okay. Now, what you will see, this was the breakout which happened here in Glenmark Pharma. Very simple analysis. This is what we called a head and shoulder. It happened at a level of 450 rupees. Thereafter, the stock kept moving higher. Now, if you bought here, you will have a question that I'm making good money. It is already at 500, or it is at 550, or it is at 600. Should I sell? But the concept which I told you, that please use the moving average. This red line moved along with the price action. Can you see this? It just kept moving higher. And whenever there was a break, there was an immediate turn which happened on the moving average. So one attempt here, second attempt here, and the third attempt here, which was thereafter, there was a follow-up on the downside. So what is the key message? If you have identified a certain stock idea at a good price, have a moving average on it. Until the moving average support does not break on a closing basis, you ride the trend. So what has happened in this example, a stock that you bought at 450 rupees moved to a level of 800 rupees in a matter of 5 months without giving you an exit. It's a very important takeaway. You will not get such charts, on many other platforms, but we love using this concept, and that's how you can play structural stories. I gave you the example of Indian hotels. Let me show you the chart. So this stock in 2020 was at a level of 50 rupees, 55 rupees. Today it is at a level of 700 rupees. Can you imagine? This is the Taj brand. This was when we identified it. I think at a level of about 150, 160. Can you see this breakout again, this line? So at around 140, I was convinced that, okay, now the trend has changed for Indian hotels and it should do very well over the next couple of years. And look at what has happened thereafter. It saw a correction, found support at the blue line, again turned around, again found support, again turned, again found support, and it has kept happening for the last 2.5 years. This is as easy as it can get. But the problem is we make our analysis very complex by doing all kinds of things, thinking that अरे ये तो बहुत आसान है, let's make it complicated. It's not easy to make money using this concept. But look at how beautifully this has worked in the last 2 years. So this is how you can use the concept of moving averages to ride trends over a period of many quarters and many years. The third example is the Nifty 50. Now, if you see the Nifty 50, and this is a current chart, by the way, this is the current chart of the Nifty 50, looking at the last 2 years. So every time the Nifty has corrected, it has found support at the 200 exponential moving average. If you read any books on technical analysis, they all talk about the 200 exponential moving average because there are roughly about 200, 220 trading sessions in a year. So that's the concept of using the 200 number. You could use a different number. But if you see the last 1.5 years, every time the Nifty has come to the 200 exponential moving average, including the day on which the recent political results were announced on the 4th of June. Very important takeaway. On the 4th of June, you had the Nifty hitting this number, and from there we are today at 25,500. So this is what you need to observe on the charts. Open up a chart and see what is working. And believe me, it will make your life very easy. So next time when there is a correction, what we will do at Goldilocks, we will see whether this support level, this line is actually holding out or not. So this is how you can ride trends, not just in stocks, but even in the major headline indices. I also want to cover another concept, and this is the concept of ratio charts. Now, I don't want to go into the details, but this is something which we do day in, day out at Goldilocks for the last 20 years. This is a stock called MCX, which has done very well over the last 2 years. Now, let me just explain this. The upper window is the price action chart of MCX, and the lower window is the ratio chart of MCX, which means MCX divided by the Nifty. Say, for example, MCX is 100 rupees, Nifty is 200 rupees. You divide 100 by 200, you will get a ratio. And that ratio is moving up on a daily basis. So this ratio chart, when it is going up, when the red line is going up, it means MCX is doing better than the Nifty. And when this red line is going down, it means MCX is doing worse than the Nifty. And it's very clear you want to be in stocks which are doing better than the Nifty, right? So if you look at this red line here, what you'll notice here, there was a price action breakout, September 2023. And this is a call that we gave to our clients as well. Officially, we covered it at this point here. And there was a ratio chart breakout. Can you see this line here? And thereafter, this ratio chart is making higher tops and higher bottoms. So this is how you know that these are stocks you want to stay committed, because the price action chart is moving up and the ratio chart is moving up. That's extremely important. If you can get these two things right, you don't need anything in the field of technical analysis. So find charts where the ratio chart is going up, because the entire idea is to beat benchmark returns. Have you seen what PMSs do, what mutual funds do? Everybody is benchmark versus the Nifty. That if the Nifty has gone up 40%, has the mutual fund gone up above 40 or below 40? That's the way the industry operates. So using technical analysis, you can actually adopt all of these techniques and concepts so beautifully. I'll give you another example. Indian hotels, again, it's my favorite. I think so. I guess I put it once again. Look at what happened between 2008 and 2021. I think the question which Sir asked, that how do you play the Zomato story and when do you know it's the right time? Taj was always a great brand. It was a great brand for about 15 years. But see what happened on the ratio chart. For about 15 years, It was not going up, it was underperforming. But in 2021, 22, you had the first breakout happening. And thereafter, for the last 2.5 years, look at this red line. It has consistently moved higher in the last 2.5 years. So what happened? It started outperforming the Nifty. So I know many of your students are trading or investing into certain stocks. Please put this red line and see whether your stock is outperforming the Nifty or not. You can do this with any index. You can do this with the NSE 500. You can do this with the mid cap index, with the small cap index. So there's a lot of research that you can actually do in this particular concept. But this is how we played the entire Indian hotel story. I'm giving you the logic because price action saw a breakout and ratio chart also saw a breakout at the same time. Another example, Nifty Pharma versus Nifty 50. Again, there is this talk that which is the sector you want to invest in. If you look at this chart here, this is the ratio chart of Nifty Pharma by Nifty. And this is not in the line format. The earlier two charts were in the line format. This is in the bar charts format. But look at what has happened in the last 1 year. Everybody is talking about pharma today. Everybody in the country today in the stock markets is talking about the pharma sector, right? But what you have noticed in the last 2 years is that this bar chart continues to make higher tops and higher bottoms. So this is how you can be in the right pockets because there is a question. Do you want to invest in pharma? Do you want to invest in IT? Do you want to invest in FMCG? You have a choice. How do you decide? Using the concept of ratio charts. So I hope these three charts will help you in understanding and giving you a perspective as to how you can ride mega trends without really getting bothered about all the noise that is there in today's world. The final concept which I want to share with you all is the concept of overbought and oversold studies. I'm sure anybody who has understood technical analysis would know. We keep saying कि अरे market काफी चल गया, stock काफी चल गया. So it is overbought. But overbought is a very subjective term. Please understand that. This is the capital goods index, and this index has been one of the best performers in the last 3 years. The index was at a level of 11,000 in in middle of 2020. Today it is at 71,000. 7 times in the last 4 years is what this index has done for you. Just imagine. And so many stocks have moved up 5, 7, 8, 10 times in the same period. Now, now the reason I'm sharing this chart is because in the last 3 years, there were many occasions when the index actually turned overbought. So there was a lot of talk that this is overbought and this is having negative divergence. What is negative divergence? Price making a new high, indicator not making a new high. So if based on this textbook concept you sold, you would have missed this entire run. So what I've done here is I've simply plotted the moving average. And this is important that when you have overbought signals, till the price itself does not confirm weakness, you don't exit the stock or the strategy. You will keep getting overbought signals. Zomato is a great example. As it rallied from levels of 50 to 290 today, there have been many overbought signals, but the price action never gave up, and it was always strong all along. So this is something that will keep happening, and I'll show you one other chart. Oh, sorry, it is Zomato. I think Zomato heard me in some sense. So what is this? So let me show you this chart because this is quite amazing and it's a great learning for all of us, including me. So Sir had highlighted about the IPO period. So this is when the IPO came at a level of 125, 130. The stock did nothing in this period. Thereafter, it made a series of lower tops and lower bottoms. Can you see this? Sir, this is specially for you. Lower tops, lower bottoms, consistent basis. So this is the reason we thought that fundamentally it might be good, but technically there is a problem because it is
Oh,
not doing well. Then for about 6 months, it got into a range, as you can see this. And this was the point when it started making higher tops and higher bottoms. And this was the point from where we at Goldilocks started to believe that the trend is changing. Now we must focus on Zomato.
right.
And this
Right.
marking that you can see, this red line that you can see on the downside is what we call the RSI. So the RSI tested the overbought line for the first time in its listing. Can you see this here? This is the highest
Yes.
reading in the last 2 years. If you go to the textbooks of technical analysis, they will say when something is overbought, it's a bad thing.
But that's
But actually, at the financial markets, when you have such a overbought reading, it is an indication that the demand is immense and the stock is actually likely to do much bigger things. So after the first overbought sign, the stock has actually consistently just done very well. And again, I can use this moving average. It never got you off the trade. So after entering at 50, you could have sold at 80, 100, 150, 200. Never give you an opportunity based on a simple concept of technical analysis, right? So this is what Zomato, and this is how we use overbought and oversold signals.
full
So
forms.
I'll end here because, I'll take some questions, but I hope this gives you a perspective.
No, no, sir. It gave a very, very good perspective, sir. How to go about everything. And consistently, I have a lot of questions flowing down in the chat box. So if you permit, can I start asking one after
Yes,
another?
please. Yes,
So
please.
the first question, and actually this particular thing also caught my eye consistently on the chart, that you are few of the analysts, sir, who didn't mention volumes while explaining the chart pattern. So, sir, what significance does volumes hold in the entire investment strategy of Goldilocks?
Yeah, I think I should have put volumes. Volumes is something that we look at day in, day out. Without
Okay,
volumes, we don't move forward because
okay,
volumes is something which tells you that demand is more than supply.
okay,
And if there is
correct.
a breakout, if there is a trend, if the volumes is not in favor of that trend, then it's a big
Yeah,
problem. I just wanted to
yeah,
keep it very simple for the audience, and that's the reason I removed it. Otherwise, we do a lot of interesting things with volume. There is
okay,
also an interesting concept of volume at price, which we also use at Goldilocks. I will
okay.
urge your students to go through that as well.
Sorry, sir. I think your voice cracked. Volume at price?
Price, volume at price.
Okay, okay. So we'll
So what
definitely.
happens is we always look at volumes as something below the price action,
Correct.
right? To see when was the high volume. But here, what I'm
Okay.
doing is I'm plotting the volume charts on the price action, which means
Nice.
it will
Okay.
tell me at what price maximum volume has happened. That is more
So,
important than when it has happened.
so then actually you use it to identify if after consolidation there's a breakout with higher volumes, so that gives you more comfort with the support levels. If
That's correct. That's
that's the
correct.
usage.
Yes, that's correct.
Okay. Perfect. Thank you so much, sir, for clarity. So second interesting question that I have is, so some one student asked that in lot of patterns, he was able to see uh, a consolidation before, then a breakout, and then a consolidation. Then the actual trend started. So, is consolidation after breakout important for that trend to, make its own position and then a sharp move comes? What's the importance of consolidation, sir, here in this framework?
Yeah, that's a very good question. What is a breakout? A breakout is a rush to buy the stock.
Correct.
When demand has won over supply, is when a breakout happens.
Okay.
So typically, if there is a rush, there shouldn't be consolidation post the breakout. I
Okay.
usually like stocks which do not see major consolidation post the breakout. The
Okay.
consolidation should happen before the breakout. And
Okay.
then the stock should break out, rally quite a bit, then go through
Okay.
small consolidations. But in today's
Okay.
world, what is happening is when the breakout happens, the move is already so big and so large that the
Correct.
stock needs to pause a little bit. It's
Correct.
almost like if you have to run a marathon, you have seen a
Correct.
lot of these runners, they have water while they are running slowly.
Correct.
So these consolidations are basically phases to refuel, energize, and go up further.
Excellent, sir. Thank you so much for this. Sir, second question, the next question that I have is, you mentioned it is very important to track liquidity. Very important to track liquidity. And sir, consistently in news, media, liquidity is very high, liquidity is very high. It won't let market fall. But sir, how, for a young kid who has just entered the market, he's figuring out his ways, how can he actually track कि liquidity ज़्यादा है, कम है? How can you keep grip of that at the overall market, or a sectoral level?
See, I think this is a very subjective area, and I don't
Correct.
think as students you should spend so much time on this, because even the best of fund managers in the country do not have an answer to this. That
Correct.
when this liquidity is going to end, right, and how much higher it is going to take the market. Today, as we speak, the Nifty has made another lifetime high. It is at
Correct.
25,800, and there are a lot of people on the sidelines waiting for that correction. But the
Wow.
liquidity keeps taking the market higher. But one
Correct.
simple example, in the US, 25 to 30% of, of the investable money is actually going to the stock markets. That
Correct.
number in India is currently about 6 7%.
Very good, sir.
So
Very
this is a journey that we have just started 2 years back. It took 20 years for the journey to start,
good.
right? We have all got into the habit. I know many of my friends, my support staff, everybody is doing SIP today.
Correct.
So that money is coming in every day, every month.
Correct.
So liquidity is there, and we are still far away from getting to that point where liquidity can actually end, because this is a revolution which has started just 2 years back. Had it been
Good.
7 years back, 5 years back, I would say be careful. But I don't think you should judge it so much.
So just on a personal note, so the kind of penetration that has suddenly started into Indian equities since COVID, I think. So because you have seen multiple decades, is it that kind of structural trend that started in US since 1982, 1983, when 401k retirement plans were launched, and suddenly US households well on rampant into equities? Actually, that was also rise of mutual funds in America, the Peter Lynch era. So is it the same phenomena structurally which is now getting replicated in India?
See,
Because
firstly, don't compare anything that's happening today with anything in the past,
correct,
because India has never seen such domestic liquidity since the time Sensex came into existence. Obviously, we are taking the example of what happened in the US, no doubt about it. Those are good examples. But this is something which nobody has ever seen. This is something that nobody's ever seen. So I think uh, if you just go by the data, this looks like a structural trend. And please understand, fundamentals have gone on side by side with liquidity. That is important.
correct,
Today we are at a 25,800 index. What is the PE of the Nifty? It is 24.
20,
In the last
correct,
25 years, whenever we have topped out, the PE is about 27 to 28. Look at
correct,
2000, look at 2008. What does it
correct,
tell you? It tells you that the earnings have been in sync with what has happened in the last 2 years. The problem would have been that households in India are pumping money into the equity markets, but the companies are not doing well. That
correct.
would have been a bubble. But that is not the case. And
Absolutely.
that's the reason I feel that you should not question liquidity.
Thank you so much, Gautam, sir, for your brilliant answer. So next question that I have is, and two or three students asked the question on the same line. So one question was, because they have just started doing about markets in depth, they have heard sometimes there are a lot of false breakouts. So how to identify them? Second, some students come from broking family. So on the SME side or micro cap stocks where there is very less float, such patterns can be easily created to give a camouflage that a pattern is happening. Sir, how you personally are able to stay away from uh, such kind of chart patterns where it might be a false breakout or a hypothetical patterns are being created in low volume stock?
See, one very clear suggestion to the students is please do not go the SME way. It is
Correct.
extremely dangerous, extremely dangerous. You might get an entry, you will not get an exit.
Exit. Correct.
You can make money while everything is fine, but when the tide turns, it will take away everything. And I don't think students should definitely, this is SME is an area for hardcore professionals with
Correct.
decades of experience to even get into that segment. So,
Correct.
and yes, as you rightly said, if there is not serious demand supply matchmaking, then it doesn't make sense to go there. For example, a
Correct.
Reliance and HDFC Bank, it cannot be run by
Correct.
one entity.
Correct,
It
sir.
cannot be run by a handful of entities, but sadly in the SME space, given the float, it can actually
Correct.
be, run by a handful of entities. That's the sad part of it.
Correct.
And that's why the
Correct.
trends, if you see, are much faster and quicker, and the money is made very quickly. But when the tide turns, there's nobody to sell to.
Filter.
So
Great.
that's one part. Please stay away from low float stocks, stay away from SME, and please stay away from micro caps. That's one very clear suggestion. Stick to the NSE 500. It's a great universe, and there are a lot of multi baggers even in that space. Coming to false breakout, if you view a lot of YouTube videos, you will see false breakouts. Because the sad part is, false breakout is incorrect technical analysis. There is a saying, the charts are never wrong, the analysis is. So if there is a false breakout in your book, it only means that all the parameters have not come into play, or you have not studied all the parameters. Do we go wrong? Yes, we go wrong. We go wrong 2 or 3 out of 10 times. That's been our track record. Despite all that you can do, but when you're looking at a breakout, please look at it in a holistic fashion. And even if there is a false breakout, for example, you don't know how to assess it, have your risk management so strong that if there is a false breakout, you're out of it. No
Okay.
ego, no emotions,
Mm.
no greed and fear. But correct technical,
Mm.
if you adopt correct technical analysis and holistic technical analysis, then there is no way you have to deal with false breakouts.
Thank you. Thank you so much, sir, for that answer. So next question that I have with me is actually very simple yet a very important question that so there are approximately 1,500, 2,000 actively traded stocks in India. So how actually Gautam sir does that? That does he uses any softwares, any particular thing to screen charts or naked eye? Every day he takes out that grunt work to watch the charts daily. How do you filter so many charts in a day, in a week?
So I think till a couple of years back, I used to do an entire NSE screening every week.
Okay.
Till a couple of years back, because given my experience, it takes me 1.5 seconds to understand a particular chart. Just the
Okay.
look of it, you get a sense ki kya ho raha hai and whether you want to go deep into it or not.
Right.
Right?
Right.
So just that look gives me an idea कि इसको deep में जाना है. अगर नहीं जाना है तो you flip and go to the next chart. So till
Right.
a couple of years back, I used to do that. Now,
Okay.
given the world of AI and softwares and systems, it becomes very easy because I have my own screeners. I put those screeners. It scans the entire 1,500 stocks and tells me that these are the 100 stocks with interesting charts. It could
Okay.
be a simple, for example, a price volume breakout. Any
Right.
stock at the end of the day which has seen a 3% move or above on
Right.
2x, 3x volumes better than the
Right.
50-day average is something
Right.
that will pop up on my screen.
Okay. So
But the
basically
top
volume shot.
200, yeah, but the top 200 stocks, I still see it every single day in the evening. It will run
Okay.
through my eye every single day, the top 200 stocks, because I need to
Okay.
feel them. I need to feel them and know them what they have done. If an Reliance, if an HDFC Bank has gone up today, I need to feel it. I need to see it.
Okay. Okay. Thank you so much, sir, for that. So next question that I have is, uh, so a lot of tune in the last 3, 4 months have started with the word called sector rotation. Okay, this is a market of sector rotation. This is a market of sector rotation. Nifty might consolidate, but sectors would rotate. And me being a market participant, I think I agree with this thing. Okay, actually, sector rotation is going on. But sir, for a student, sir, what patterns can he read more about that can help him understand okay, how sector rotations play, how to identify that?
Sector rotation is here to stay. And any bull market, if it has to do bigger things, there has to be sector rotation. You can't have one sector or two sectors riding the entire bull market. Doesn't
Okay,
happen and will never happen. If it
okay,
happens, then that bull market will not survive. Like what happened
okay.
in the dot-com bubble, if you remember,
Good.
it was only
Yes,
IT which was doing well. There was no
yes,
rotation. Anything to
yes,
do with IT did well for about 1.5 years. And when the
yes,
dot-com bubble burst, they all fell. So sector
yes,
rotation is here to stay. How can you identify which are the sectors where I need to commit into and when the rotation is happening?
yes.
Ratio charts.
Okay,
Ratio charts, which I shared with you earlier. If there
yes,
are 8 major sectors in the market, divide each sector by the Nifty and see whether
okay,
that ratio chart is going up or not.
okay,
If that chart is going up, it means you are in the right sector. If that chart is
okay.
going down, that's not a sector you should focus on. Move to something else.
Okay. Excellent, sir. Thank you so much for patiently answering everything. Sir, next, sir, one student asked that Gautam sir has consistently mentioned about some books that sir will recommend, that because all of us come from fundamental background, but if you want to learn trading from basics, so what are the recommendations that you would have, be it either books or anything else?
Yeah. So fundamentals is great. I think we follow it ourselves. And I
Yes.
know fundamentals sounds a lot more posh. In today's world, sadly enough, if you had to choose between a fundamental analyst and a technical analyst, they will choose a fundamental analyst because they can talk earnings and P and a lot of jargons which sounds very interesting. उससे रिजल्ट
Correct.
निकलेगा कि नहीं वो अलग चीज है बट वो
Correct.
बिकता है आजकल की दुनिया में वो बिकता है राइट बट एज अ
Correct.
टेक्नीशियन आई हैव रियलाइज दैट इट्स दैट studying price action is actually studying fundamentals. Because if I studied a Zomato or an Indian hotels, I'm actually indirectly studying the fundamentals of that company. So that's the beauty of it. Coming to the books, I'll recommend two books which have really worked well for me over the last so many years. Technical Analysis of Stock Trends by Edwards and Maggie, and Technical Analysis Explained by Martin Pring. So Mr. Martin Pring, I think, has almost been a mentor. I met him as well. Wonderful person, still does a lot of posts on social media and has his own advisory.
Okay.
So these two books, I think, if you start and if you can read it at least 3 times, you'll be on the right side of things.
And thank you so much,
So we'll
sir.
take one more question. I have a shortage of time.
Uh, thank you so much, sir. I think, sir, if I check my questions, sir, I have a lot of. Let me, sir, quickly scan through the questions.
If we do it quickly, we'll
Uh,
do two.
okay, thank you so much, sir. Okay. Sir, one question, if I think that was a very important question someone asked. You mentioned smart money earlier. So, sir, what they are asking is smart money only just FII, or are you also talking about large DII or HNIs? And why it was so important to understand where smart money is moving and how you identify that through technicals is the final question. Okay, smart money यहाँ पे आ रहा है.
No, understanding smart money is important. Like, for example, everybody wants to know what late Rakesh Jhunjhunwala ji did for
Correct,
15 years. Whichever stock he bought,
correct,
everybody thought that that stock will do well. It's about smart money. And
correct,
today, what Radhakishan Damani ji is doing, or what some of the greatest fund managers are doing, you need to
correct,
know who is doing what,
correct,
right? But at the same time, don't blindly follow any person. That's the
correct,
wrong thing which a lot of people do. Because many of these greatest investors, they are more wrong than right.
correct,
Actually, if you've read some of their interviews also, 6 out of 10
correct,
times or 7 out of 10 times they are wrong. It's just the
correct,
position signing and the risk management which is so good that they are what they are today. So if there are certain fund managers, for example, in the country, you have many mutual funds, there are many fund managers. There are
correct,
certain funds in the market which have done much better than some other funds, which means that fund manager has some acumen to have outperformed the Nifty. You please
correct,
follow on a monthly basis what that fund is doing. You get a sense, so that is smart money, right? Smart money
correct,
can go horribly wrong. And that's where analysis comes into play because you are putting technicals, fundamentals, and smart money into play. And
correct,
fortunately or unfortunately, in today's world, smart money is domestic liquidity. It is that
correct.
average person on the street who is putting the money every day and helping this market during any correction.
Thank you so much, sir. Sir, one last question. This is what, sir, we ask to all our guest speakers. Sir, any mistakes that you did when you were young and you learned out of them and you would want today's young generation to never repeat those mistakes. If you can help them learn from your mistakes, some two, three big ones, it will help them a lot.
Yeah, so I was in a job in 2003, 2007 in the last bull market. That was the
Okay,
time when the Sensex moved from 3,000 to 21,000.
okay,
I was very good with identifying stock ideas and identifying trends. I
okay,
did this on a repeated basis. The biggest mistake which I did was I did not allocate well and I
okay,
exited early.
okay,
You know, Because if I got a 15% return in say 35 days or 40 days, for me it
Yeah.
was like a great opportunity.
Yeah.
But then that stock went on to do 2x, 3x, 4x thereafter in that bull market. And if
Yeah.
your conviction is very high, you should allocate well. What are the greatest of investors have done? What did
Yeah.
Rakesh Jhunjhunwala ji do? He allocated very big to Titan. And
Yeah.
some of his other stocks, which is also known, which didn't do well, he
Yeah.
allocated very, very small to that, that it was inconsequential to what happens.
Yeah.
So allocate well when your thesis you feel is on the right side, and think big and have discipline. If you follow these three things, if I had taken care of these three things, I would have played the last bull market much better than I'm playing it right now.
Yeah. Thank you so much, Gautam sir, for your time. I personally had brilliant learning, and I'm sure all of our students sir, would have had tremendous time with you today. Again, sir, thank you so much for agreeing to come and speak to our students. We actually feel blessed. Thank you so much, Gautam, sir, for your time. It was a pleasure, sir,
Thank you
to
for the
host.
opportunity. It was lovely. And my mail ID is there with your team. So if any of the
Yes.
students at any point of time have any questions on whatever they are doing, feel free to
Yeah.
mail me. I'll be more than happy to respond.
Thank you so much, sir, for this opportunity. I hope students would use this to best of their potential, sir. Thank you. Thank you so much, sir.
Thank you. Bye, everyone.
Thank you. Bye. Thank you.